Welcome investors to my channel FiscalVoyage. I'm Felix, and today's video we're going to talk about two separate companies that I recommended in the month of September, and since that time, and basically almost a little over 2 months, the stock are up almost 50%. These two stocks I covered in early September, and both of these stocks are up almost 50%, and hopefully we're going to go into those videos that I created in September and look at what were some of the things I said and why, my thought process, and we're going to look at their performance since then. And basically they're up both 50%, and we're going to look at, are they still worth a buy at current prices? So make sure you hit that subscribe button so that you are notified that these different videos that I create, I present to you good companies that are possibly buying companies where you could purchase shares at a reasonable or undervalued price. So make sure you hit that subscribe button, and if you enjoyed this video, hit that like button as well. So let's get started. Alright, so here's the first stock that was up almost 50%, Micron Technology stock analysis video, which was on September 28th. I made this video for Toncho. You can see here, again, you guys could leave a comment below and let me know what stock would you like me to analyze. But he wanted me to do a stock analysis on Micron Technology. So I did a stock analysis on Micron Technology, and on that day, the price was $49.20, and I had a fair price around $56, and it was undervalued 14%, and I gave it a buy recommendation here as a good buying opportunity because I saw a lot of the things that I mentioned here. You can see revenue growth over 11% for the 10-year period, 14% for net income growth, operating income growth, earnings growth. So everything looked good. The balance sheet looked great. 0.19 debt to equity ratio. Current ratio was good. Debt to cap ratio was solid. Interest coverage very solid. So I gave it a buy recommendation for Micron Technology. And if we go to Google, and I made this video on September 28th, and if we go to Google Finance, September 28th was here, and it actually dropped 8%, you saw there. So it made it even more an attractive buying opportunity. But say you bought it when I made that video, you can see you're already up 44% as of today, or Friday's closing price. So that's real good return in a little over 2 months. 44%. You already almost made half of your money in 2 months. So that was a great, recommendation there. Hopefully you guys took advantage of that. If not, there's a lot of videos that I'm coming up with great buying opportunities. So make sure you hit that subscribe button and that notification bell. You can see here, so it's grew, 44% that time period. Well, first let's go to fast graph and then see. I think right now the stock is going for $73, and I think it's overvalued now actually, because if you look at back at my video, I had a fair price at $49, and nothing really changed or a fair price of $56. Nothing really changed fundamentally for this company. So I still think it's around $56, maybe $60 a fair price. So right now I think the company is overvalued at $73. So if you want to take your profit, this would be a good opportunity. Again, it's going to be a short-term, short capital gain tax. So just FYI. But if not, this company is a good, solid, quality company that you can hold for a long term. But right now it does look overvalued. You can see here, if I shorten this time period here, let me shorten it here. Yeah, you see it looks overvalued based on the fast graph. You have a potential annual rate of return about 1%. So if we go look next to the next company, I did a video on Invesco, and in that video, the CEO actually spent almost $3 million in purchasing shares at $10.19. And in that day, when I made the video, the price was $11.14. So it's a little higher than what the CEO bought for. But I made this video on September 4th. If we listen to a point here, let me put this on. So right here, if you were to go back to a PE around 12, you have huge total annual rate of return, about 40%. So let's do an adjustment. So you saw there, I said you have a potential annual rate of return of 40%. I made this video on September 4th, and in Invesco right now on September 4th here, it actually dropped a little bit, almost 10%, but still, even if you bought it that day, you'll be up, here I put it here, 4%, you'll be up 56% since that day. So, hopefully you guys took advantage of that. I actually sold my position for a nice little profit, and I invested in another high quality company. Right now, I think the company is fairly valued. If we go to the fast graph, I think the company right now is fairly valued. You can see here, showing this time period. I like to see on fast graph short time period. You can see here it still has some potential rate of return, about 23%. But I think there's other higher quality company that I personally would invest in than in this company. So it still has potential for nice rate of return, but I think I'll give it a pass on this one right now. Earnings are expected to grow 17% for next year, 9% for the following year. So earnings are expected to grow, so that's positive. You can see here total annual return of about 23%. But I just right now, if you bought shares at that time when I made that video, I think right now I'll continue holding. You have a nice yield around almost 4%. Just continue holding and collecting that dividend. I think the company will start increasing the dividends sometime next year because they've done that. If we go back to 2018, they kind of did that. They dropped the dividend and then started picking it up again. So I definitely see that happening again. But overall, those were good to call in my part. This is why you guys should subscribe to my videos or subscribe to my channel. Because I do a lot of videos like this, talking about different stocks that you guys recommend, and I give you my opinion based on the fundamentals of the company. So those were the two stocks, Invesco and Micron Technology. I think Micron Technology is overvalued right now. I personally wouldn't buy shares, but continue. Maybe you could sell it for now for the profit. Invesco is more likely kind of like a hold. It still looks undervalued, but I personally wouldn't be buying shares at current price. Like I said, I actually sold for a nice profit there because they cut the dividend. So I invested in another company that's growing dividend, like companies that grow dividends, not cut them. But overall, two good companies. I think Invesco still has potential to run up higher. Micron Technology does look overvalued, so I give it a pass at current prices. But it is a high quality company, as you saw in that previous video. Again, I'm going to provide a link to those two videos so you can see more detail of what I talked about. But Micron Technology, I think, is overvalued at current price. Sell it for a profit or just continue holding at current price. But overall, if you're new to the channel, make sure to hit that subscribe button because I do videos like that, and I do videos like this where we go back in history and see, how some of these recommendations I've done, how did they perform? Because if I just say buy this, buy that, buy that, buy that, and there's no good performance in that, why bother watching my channel, my video, right? So I like to go back and let's do reviews on each company that I covered before and see how they performed. But anyway, if you have a company that you would like for me to analyze next, leave it in the comments below, the ticker symbol and the company name, and why should I analyze that company. Give me your reason, what you like or what you don't like, and things like that. So again, make sure to hit the subscribe button, and if you like to make money, hit that like button for more videos like this, and I'll see you guys in the next one.